My relative always say renting is for losers. Is it true? As a disclaimer, we are not a property expert, so none of what we say should be taken as financial advice. This is purely educational.
Now guys, if you're really interested in building a 6 to 7 figure portfolio, we've got the perfect solution for you. Head over in the comment section or the description to sign up for our free masterclass where you can get all these proven steps to achieve it.
Okay, MJ. So before we get into the main meat of this content, right, which is own versus rent, just want to get your general thoughts on property investment and what you think about it.
I think property investment 90%, 95% of the time is a proven investment. Simply because it's a great forced savings. And as I've grown older, I've learned to appreciate why people need forced savings, because it's not natural for people to save. And yes, there is EPF, but there's a certain limit to EPF. Whereas with properties, you can buy, as big as possible.
Yes.
So I know friends, right? Their parents recognize that the son or the daughter is not very good at saving money. So what they do is, son or daughter, I will buy for your house. I'll do a big down payment, but you pay the installments. So they are forced to pay the house to at least secure some sort of nest egg. It is proven, right? In Malaysia, if I'm not mistaken, it grows maybe 5 to 6%. If you include real terms, which is net of inflation, you're looking at maybe 3%. And then in the US, it's a bit lower. Over 100 years is something like 1%.
Right.
Real terms.
Yeah.
After inflation. So it's proven.
Yeah,
right?
yeah. Actually, that's very true, because my friends' parents actually do buy them properties.
Yes.
But whether or not they are paying the monthly installment or they already have a tenant inside the property, that's another question now. But yeah, they see it as like a an emergency fund. Not really emergency fund, but it's like a fund for them in the future. If later down the road they have any difficulties, they have this property to at least, like, I don't know, like to use it to finance certain expenses or certain debts. So that is actually pretty pleasant to have such parents who actually buy properties for you.
Exactly. I wish my parents did that. But I think part of the issue is also simply that, or not really an issue, an advantage rather, is that it is one of the few investment assets in the world where banks are very happy to lend you money.
Yes. And at a quite an attractive rate.
I mean, when you look across, you adjust for everyone's socioeconomic background, right? If you look across all asset classes, it is the asset class with the lowest interest rate.
Yes.
Of course, it will never be as low as the BLR or the Fed funds rate, but it is generally maybe +1%, +2% higher than that. So it's very advantageous. And for a lot of life expense, property is very unique because it's both almost like an investment or an expense. It really depends how you look at it. But it's the one expense where, unlike a car or your credit card or your personal loan, your wedding loan, whatever loan, right, it grows by and large in value.
Yes.
So that is a unique characteristic.
Yeah, as long as you buy the right property at the right location at the right timing.
Yes, that's right.
Okay, so now we go to the meat, which is, are you a buyer of property or do you prefer to rent? Let's say if you have the money.
Yeah, so if I have the money, honestly, I would buy a place of my own once, right? Or at least at any one point in time, I will only have one place that I will call my residential home. So, of course, I could buy, let's say, starting a condo, and then, if my income grows, in a big way, then maybe I will shift to a terrace or maybe semi-D or a bungalow, things like that. Yeah. But there'll only ever be one residential property.
Right.
Any number 2, 3, and 4 needs to be investment properties. And in fact, I would probably reverse the order a bit. I think if I were to buy a property, the first one would be an investment.
Yeah, I think that's what Yi Heng's video usually like stress.
I think that's very true. And it's not just him. I mean, he is really just repeating what very successful property investors have been saying. Yeah. I always give an example of a friend. He has like 30, 40 properties, but he's still renting. You know, some pay him income, some don't, but by and large, you know, he just manages these different properties. So if I had the money, I would buy one. But there are other factors that go into play for me to buy a place to stay, right? You know, of course, partner, location and things like that. So it's just beyond just money, I would say.
Right.
But guys, before we move on, if you're someone looking to level up their stock investing skills and you need a lot more guidance, we do have a one-on-one program called the Mentorship Program. If you're interested, you can apply it in the comment section or the description.
Okay, so the title we have here, it is rentings are for losers, right?
Yeah.
Yeah. So what are your thoughts on that?
Definitely not. So when the people who are saying that renting are for losers are typically people that are born in eras where, you know, properties did very, very well. And so they think that because they were born in the few decades where there was a property boom, that they extend it to the entire, like, forever, right? It's the same concept of, you know, a lot of our parents, let's say, recommending us to become doctors and become engineers, especially doctors. I think it's a classic case, right?
Yeah.
Well, doctors are the ultimate, you earn so much money. But today, you can see, right, many doctors are complaining, right? The most famous doctor in Malaysia is Dr. Jason Leong, who is a comedian. So it just goes to show how past advice is not always wise. And the case of property, you know, in the region, it's actually still one of the cheapest to buy. But I think in a lot of places, in prime areas that you want to live and all that, rent is always going to be lower than your installment.
Yes.
Or at least it will be lower than your installment for at least maybe a decade and a half or 2 decades. So when people say are losers, I'm like, wow, okay. I don't know, just math it out, right?
Yeah. Exactly. All right.
Rent affords you also a lot of flexibility.
Yes, exactly. Yeah, you
Right.
can choose to switch areas if let's say,
That's
property
right.
is not.
And so the difference between the rent that you pay and what you would pay in installment, that can be used for other things.
Yes.
And the beauty, of course, is if you are bored with one property, you just say, okay, after 2 years, I don't like, then I'll move on to something else. Or not just within Malaysia, you can do it across as well.
Right. Okay, so I will sum it up into this. If you're renting, you have the flexibility. You have the options to whether to continue staying in that particular property or not. But if let's say you buy it, you are actually committed to own that property. You have to either pay the installment or find a tenant to actually rent out your unit. So yeah, there's a difference between two. One is more flexible, the other one is not so. All right, so an alternative source about property investment that a lot of people are saying, right? Because some of them, let's say they cannot afford to buy property, so they opt for REITs.
Yeah.
So what do you think about investment trust in terms of real estate?
I would say this, that probably over a long period of times, it is less efficient than a property. Because property, you have leverage.
Yes.
And as long as you can withstand the cash flows, the leverage factor will boost your returns, right? Now, I'm going to be upfront. You can spend all your time analyzing REITs and what is good, different types of REITs. But I've always believed REITs are for rich people. REITs are for people who already have a big pot of money. And they just want some sort of recurring income, right? And they don't really want to think about their investment so hard. So even at 5 to 6%, let's say if I have a big pot of money, right? and I have, let's say, I don't know, 10 million. If I buy a property, a REIT that yields me, let's say 5-6%, that's 600,000 a year, which translates into roughly 50K a month. So that's great. But if you were to apply it to, let's say, a property, right, with that amount of money, there's a good chance that, at least in the initial stages of owning the property, that the rental you get is, if you're very good, it's like on par with
the installment.
But generally it's lower than the installment, right, by and large. So you don't even include areas, things like the maintenance and stuff like that.
But definitely residential will be out of option if you have that 10 million ringgit, right? I think usually people will opt for like industrial properties, land, warehousing, all those big stuff.
Potentially. So again, it really, I would say, depends on how you negotiate with the bank. And it's a lot more complicated than this.
Right. So so just want to end it up with, should small guys actually, let's say they are starting to dabble in the property market, right?
Yeah.
And they are interested in this industry, in this asset class. So would you like, not to say advise or recommend, but let's say you are I'll
just say what I would do. Maybe
it's either REITs or property. Which one would you actually opt for?
It really depends on the needs and my requirements, and also how much money I have.
Yeah.
If I'm very liquid, probably I'll go for REITs personally, right? Because then it's just gonna pay me a cash flow, and then I can just have fun with the cash flow. If, let's say, I'm someone who likes like more
physical, like you want to be there, you want to control that.
Yeah,
property,
that's what I'll do. If I can give an example of, if I had the 10 million, I'll probably put 7 or 8 into REITs, and then the other 2 or 3 I will, either buy a property to, 2 or 3 properties to, invest in.
Right. So it all depends on your profile on what do you prefer. Do you prefer, like, for example, REITs, you can get instant cash flow because the property is already there. All you need to do is just put money there and then you get money. For property itself, that one's a little bit need time.
Yes.
Yeah, the process of like getting the SPA signed, getting your tenant to rent out the property. Yeah, everything, it's more time, but then you own that piece of land. So that's the only difference between these two. Yeah, okay. So I think that's about it for today's video. I hope you guys enjoy this kind of different style of content. I mean, if you guys do enjoy, please do let us know in the comments. Who knows, maybe we'll do something other related asset class in this channel. And before you guys go, this is our property. It's actually FIRL Pro, property, but it's actually the stocks. And so far, the performance for February 2023 has been doing pretty well.
To be fair, March will be probably worse off.
Yes, exactly. But, so in March one, maybe you don't know, maybe the rates one, you see 1 or 2
more rates.
Yes, exactly. But anyhow, if you notice the bottom part, there's a Telegram stock portfolio. So those are more of a short-term play. So for example, if there's like a positive catalyst in the near term, we will usually let our Telegram members know about this news. And usually those returns are actually much more quicker. So which means you have to take profit faster. And yeah, so far those are the performance. I have not updated the Telegram stock performance, but in March 2023, there'll be a long list because I added a few more. So yeah, make sure to check out and FIRL Pro. And if you are not convinced yet, you can actually access our free sample. Basically tells you how we write our FIRL Pro stock report, how we write our big picture report, and all those good stuff. So the links to access this free sample is in the description and comments. So MJ, any last words?
No, but guys, just to conclude, I don't think renting is for losers. I think that as we become more developed as a nation, as space become more scarce, and as property prices keep going up, renting makes a lot of sense, and there's no shame in it. At the end of the day, you do not have to succumb to the mindsets of your parents or your ancestors, where property is king, is the number one thing, and things like that. There's a lot more we can go into it, but yeah, that's my conclusion. Renting are not for losers, just as buying are not for losers. Understand your own conditions and your own wishes and dreams and requirements and things like that, and then you will be able to make a decision, right? one man's food is not, it can be another man's poison, right? Vice versa. And so just because it's good for you to buy doesn't mean other people is good for buying. And the same way, just because it might be good for, like, I think renting is better, superior, it doesn't mean that it's necessarily superior for you.
Yes.
Right? Okay. If you have a problem with forced savings, for example, I think it's a pretty decent move to make. So, yeah, guys, thanks for staying all the way until the end. Always a pleasure to do this kind of videos. A little bit different from what we usually do. And, come check out some of our other videos, and I look forward to seeing you in the next video.